Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of the video is How to Be on Top of FX Trading Part 2. I recommend to traders to watch the first part of this video. Each part of this series of video are independent video. In each video, I am highlighting, a very important, Forex trading, components, all right? Very often, trader will watch, when we do a series of video, trader will watch the first part, the second part, and then sometimes they will not watch the rest of the series of video. But each video is independent, and we are highlighting, essential, component of how to trade, all right? Now, in this video, I want to focus, what I want you to remember in this video is the non-farm employment change. You may say to me, George, I already know about this, and I don't need to know what is happening here. Okay, fine. All right. The currency pair that we are looking at here, this is the New Zealand dollar, US dollar currency pair. What is happening? Why the New Zealand dollar, US dollar currency pair is going down like this? Why? All right. Okay, you may say to me, it's because it's the declining channel. Okay, fine, that's a declining channel, yes. So the declining channel, what the declining channel is telling us, is highlighting to us that the market sentiment is bearish, okay? Now, the next question, okay? Pay attention, the next question. Why the market sentiment is bearish? Why the market sentiment is bearish toward the New Zealand dollar, US dollar currency pair? Is it a short-term market sentiment? Is it a long-term market sentiment? All right? So to be on top of FX trading, we want to ask this type of question. Why people are selling this currency pair? All right? Are they selling it for short-term? Are they selling it for long-term? Okay, I know the answer to that, and I can share with you why people are selling what I like to call the market movers, which are not the financial instrument. I'm talking about market participants that can move the market with their trade. So when they buy, we will see that the price will just, if they buy, the price will just go up big time. If they sell, the price will go down big time. These are what I like to call, market movers in the Forex market, all right? We also call financial instruments that are changing the dynamics of the market movers. But in this video, market movers are market participants or traders that have a lot of liquidity that can change the dynamics of the market with their trades. All right, what I have done here, I have projected the channel. So you see here, this is about the market geometry. Price came out of the first channel, all right, and we project it to the downside. Now it's out of the second channel. We project it to the downside. Now it came out of the third channel. Okay, I project it again right here. That's why I draw this channel very fast on this chart. All right, let's go to Forex Factory. In order to be on top of FX trading, all right, you know what I'm going to say now? We must check the economy news. I want you to understand this. I want you to remember it. That's why I'm recording these short videos, tutorial, and to get your attention once and for all, so you can, quickly, start improving, On the first Friday of each month, we have a very important economy news. This is what we call the ADP non-farm employment change. In the first video, we talk about the ADP non-farm employment change, which is due on the first Wednesday of each month. I need to add something here to traders. Apart from the ADP non-farm employment change due on the first Wednesday of each month, we have another high impact news here, which is due at 10 a.m. Eastern Time on the first Wednesday of each month, the ISM Manufacturing PMI. So do not forget these two economies. So first Wednesday of the month ADP non-farm employment change, and ISM manufacturing PMI. The ISM manufacturing PMI is due at 10 a.m. Eastern Time. That's 3 p.m. London time. If you want to know more, click on the envelope here, okay, and then you will read about it, okay, and once you finish to read, you close it right here. So 2 economy news on the first Wednesday. But on the first Friday of each month, we have another high impact news, which I like to call the daddy economy news. Okay, the highest impact economy news, the non-farm employment change, due at 8:30 a.m. Eastern Time. That's 1:30 p.m. London time. In order to be on top of forex trading, one must know when the economy news are due and which impact they will have on the markets, and how, very important, how the market participants, especially the market movers, okay, are using this data to trade, because their trade will move the forex market. So constantly we want to go into their mind, we want to understand what these market movers are likely to do, how they are interpreting their decision, or they are implementing their strategy, and what is likely to take place, so we can all flow in the same direction. We don't want to fight the market pattern, talking about technical trading, and we don't want to fight the market movers, because we don't have access to the same amount of money like these type of traders. All right? So you will promise me, all right, that you will not forget the non-farm employment change due on the first week of each month on the first Friday. So sometimes they will change the date, but very often it's on the first Friday. And this week again on the 3rd of October 2014, right it is here, right here. Sometimes a lot of traders will forget and they don't even know about it, and they will be doing their own thing, and the price, the market movers, will move the price against them, and you don't want to be on the wrong side of these market movers. So as I explained to you in the first video, the aggressive traders, the speculators, the gamblers will look at the previous figure and compare it to the forecast, and if the forecast is superior to the previous figure, in this case non-farm employment change, it doesn't mean that each time the forecast is superior to the previous figure is bullish, but when the forecast is superior to the non-farm employment change forecast is superior to the previous figure, the speculators, the gamblers, the aggressive trader will start to buy in the dollar, depending on the financial instrument you are looking at. And if the forecast is inferior to the previous figure, the speculator will be busy, selling the financial instrument. Sometimes you will see that the forecast for the ADP and the non-farm employment change itself, both will be bearish. In that case, the sentiment, the aggressive trader will be busy selling. And if both ADP and the non-farm itself is bullish, they will be busy buying. You need to know how the market is moving and what is taking place in this messy market. Okay, so this is about the non-farm employment change. You may say to me, George, I don't trade the economy news. I trade the financial. I trade only. I use technical indicators. That's fine. Okay, nothing wrong with that. Okay, if it's working, that's great. But the economy news will change the market sentiment. Okay, and if the market sentiment is bullish before, and now the market sentiment has changed, you want to know. All right, you want to know. So suppose you were buying, sometimes you see your trade is very profitable, and the next thing you look on the screen is gone. Something has happened, something has changed. And you want to know what is capable to change the market. You want to know. All right, you want to know. All right, so apart from the non-farm employment change due this Friday, we also have the trade balance for the United States, and also the unemployment rate right here. So all these red envelopes are here. And as I explained to traders in the previous video, it is very easy to trade the last week of each month, but very tricky to trade the first week of the month. So if you have not been following us, I recommend that you subscribe to our YouTube channel, Joe Trio channel, Day Pro Trader channel, 24 channel, so you may upgrade your trading skills. So I promise that I will explain to you why people are selling the New Zealand dollar, US dollar currency pair. This is about the importance of the economy news. Recently, all right, the central bank in New Zealand was a bit upset. Why were they upset? They were upset. The bank was upset because the New Zealand dollar was going up too much. The exchange rate between the dollar and the US dollar and the New Zealand dollar, okay, is not favorable to New Zealand. So New Zealand dollar was going up too much, which means their gold will be too expensive in relation to the US dollar goods. So they were not happy. So they were telling the market that, okay, guys, if the New Zealand dollar continue to go up at this rate, we are likely to cap it, which means we will set a specific price level, a specific exchange rate between the New Zealand dollar and the US dollar. And the market took that seriously because they know that the central bank in New Zealand, okay, does not want the New Zealand dollar to go up. So the market say, okay, guys, you want us to sell your currency? Great. So they came back, and here it is. The market movers started selling, okay, the New Zealand dollar, US dollar currency pair because the market sentiment has changed, the dynamic has changed. A policy by a central bank has changed, okay, the market sentiment. All right. So apart from the economy news, we want to pay attention also to the policies and the decisions that are made by, okay, the central banks. In the United States, we talk about the Federal Reserve, okay, bank. In Great Britain, we talk about the Bank of England, okay. In Japan, we talk about the Bank of Japan. All the central bank will talk and will say something very important. And this is a long-term selling signal here that the market movers are playing. They are selling it. Very often, this has happened also before. One of the, quickly, the Euro Swiss franc. There was a time when the Swiss franc was going up too much in relation to the euro, and let's click on the Euro Swiss franc. Here it is, and they cap it. They set a specific exchange rate between the euro and the Swiss franc. This is about the competition and the currency war that is taking place, okay, in this crazy, okay, macroeconomic environment. All right. So for the New Zealand dollar, okay, US dollar, the market want to sell it because of what the central bank has said. You see now? So if you want to align your strategy, your technical trading with what the market sentiment and also with the policy that the central bank are talking about. Because to trade Forex is not all about technical trading. It's about, okay, both. You don't want to ignore the technical trading. As I explained to you, at the time when we are about to place the trade, we are trading the price. So you will check your channel, you make a decision. It's not because, okay, the market sentiment is bearish, you just come and sell here and the price go up, rally a little bit up, take you out before going down. You want to sell at a resistance level on the edge, okay, taking a value signal and using the trading drill. You are using a trading system. Your trading system gives you a sell signal. Okay, you also know that, okay, the policy is bearish, the market sentiment is bearish. You want to take the signal, a value signal on the edge, okay, and give it a chance. And at the time when you're about to enter the trade, check the risk-reward ratio. Is it worthy entering the trade here? Is your money, and you want to be very, very defensive. It makes sense? So first week of the month, first Friday of the month, the highest impact economy news is what? The non-farm employment change concerning the dollar. We want to be aware of the aggressive traders, the speculators, and the gamblers. And also we want to be aware of the market movers. We want to check Forex Factory. We want to check Google Finance. We want to check Yahoo Finance. We want to check Bloomberg. We want to check the Financial Times to know what is taking place. All right? It makes sense? It is also powerful. Recently, the market was busy selling the pound-dollar currency pair. Why? This is again economy news. There was a referendum in Scotland. It was about Scotland, okay, asking for independence, and okay, the market was selling the pound. This economy news was forcing, okay, the pound-dollar to the downside. For Forex trading, it's almost impossible to achieve consistent winning trend if one is not paying attention to the economy news. Because 1 minute the price going up, the next minute, if there was an economy news that is changing the market sentiment, you will see the reaction quickly. Because the market movers, okay, will okay adjust accordingly quickly to the market sentiment. We are talking about the market sentiment, talking about technical trading. We are referring to the market patterns, the rising channel, the declining channel, but at the same time, we want to know the economy news, what kind of interpretation, okay, the market movers are giving to the news. It makes sense? It is also powerful. I hope you have learned something from the video also, okay, and we put into use to make excellent decisions. So first week of the month, first Friday, non-farm employment change is the highest impact news. You may decide not to trade it at all, so you wait until the news is released. Volatility has settled the market because you don't want to rush into it during the volatility time, and then you place your trade. Or you can use the RTS 315, go to stochasticmarket.com, click on document, register for free, re-log in for free, and download the RTS 315. Go and watch the video that we posted at Just Trio channel, how to trade high impact news like professional traders, and also how to trade the non-farm employment chain like a professional traders at Just Trio to understand how we implement the RTS 315 1 minute before the news is released. Also, you want to understand how we use a distorted candlestick bar on the hourly chart. We highlight the high, the low, and the median line. And as the news is released, the volatility is finished, the price has moved. Okay, now we are waiting for the price, the market to correct the distortion. All right, sometimes because the economy news is bearish, okay, you can know that the market wants to sell. So you are waiting for the rally. So here it is. Look, one example here, just quickly to point out this to you. Suppose you were here and the price went down, okay, because of economy news. Suppose, I say suppose, all right? It went up big time, okay? So the market sentiment is bearish. Everybody's surprised. Suppose the forecast was saying that it's going to be bullish. This is the best scenario. So if the forecast was saying it's going to be bullish, but suddenly it happened to be bearish, you will see the reaction, depending on the impact of the news. So you will quickly draw your Fibonacci drawing tool and highlight it. You are looking for a rally near the 61.8% zone, and then on the edge, if you receive a sell signal, then you will sell it. In that case, you are not fighting the market. You are very patient. You see the reaction. You know what is taking place now. Everybody wants to sell. Now you receive a sell signal on the edge. You are taking it. On the other hand, you can be very patient. Suppose you were, which example should I give you now? This pair is going, let's look at the dollar yen, okay? Suppose the news is very, very bullish, okay? And you see the first reaction, okay? Remember, okay, first reaction, price goes up big time, okay? Price goes up big time. You say, okay, all right, the news is bullish, okay? Suppose you were here, the news was very bullish, okay? And the price went up fast, okay? This is one example, just suppose, okay? Now you want to buy. Because the news is bullish, the market sentiment has changed. Probably the forecast was bearish, but out of the blue, okay, the actual figure was bullish. So you know that those who were selling before, the aggressive trader that was selling before because of the forecast that was bearish, are under pressure to close the bearish trade. You are waiting for a pullback. Right, pullback, you are waiting for it to pull back on the edge or near support level, and you are using a trading deal waiting for a clear-cut signal. You can either enter the trade before the new using the RTS 135, RTS 315, RTS 315, all right, 1 minute before economy news. This is a bit risky because sometimes the brokers will ask you too much margin, all right, because of the news that is about to be released. If they ask you for too much margin, do not take it. Or you may use a limit order to control it carefully, all right? All right, I don't want the video to be too long, so I don't want to be doing too much blah, blah, blah. The key point you want to understand, the economy news will change the dynamics of the Forex market. In order to be on top of the FX trading, one must know when the non-farm employment change is due and how one can trade it, and be aware of the market movers. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. This is about how to be on top of FX trading, part 2. I invite you now to follow me into the next video when we will share again another tips about how to be on top of FX trading, part 3. Speak to you soon. Thank you for watching, and I will speak to you very soon.